Welcome to another episode of the KB article. I'm joined with my co-host Kyle Kinsler, and so excited about today. You know, we're trying to bring value to the small business entrepreneurial community, and I think we got two rock stars here. I've had the privilege of working with them and see what they do for um, small businesses, whether it be financing, whether it be tax credits, whatever, just advice, consulting. So there was Shield Advisory Group. So join me in welcoming Matt Meehan and Lou, the professor, Rosa Bianca. Welcome,
Thank
guys.
you very, yeah, thank you very much for being here today. We appreciate the two of you taking the time out to be with us. So, no, fantastic. But anyways, yeah, give us a little bit of background on yourselves, if you don't mind. I know you've been working with Chad here a little bit in the last couple of 3 years, and it sounds like, and Chad maintains, and I've gotten to where I've gotten to read your book here, and we'll talk about that more a little bit later. I kind of dived into that, and I'm really interested in hearing what your story is, and how did you two be partners, at the same time too, and yeah, just give a little bit of background there if you don't mind.
Hey, well, thank you guys for having us. We really appreciate it. Yeah, we've been working with Chad for a while. Me and Chad met in our mastermind that we were in, and we started doing some calls together, and we noticed there's a lot of synergy in what we did, so we started doing some business together. So thanks for having us again, Chad and Kyle. Background, how far back you guys want to go?
Just a little bit about where you were and kind of really what brought about Shield Advisory Group, brought you guys together, and what brought you to creating something like Shield Advisory that's consulting on various levels with so many different aspects of business to kind of, I would say, holistically help small businesses. How did that get fired up?
Well, I guess let's go back a little bit from where Shield Advisory Group actually derived from, right? So prior to founding Shield Advisory Group, I worked on Wall Street for 17 years, worked my way up from a cold caller to a trader to actually buying my first business that I ever bought before, which was another broker deal. And the reason that we did that and bought that broker dealer was because to start a broker dealer is really hard, and the licensing requirements takes a lot of time. So essentially, it was a lot easier for us to purchase a broker dealer that had the licensing requirements in place and start one from scratch, right? So I spent 17 years on Wall Street. Around 2015, I just got fed up with New York City, I got to tell you. And I was just tired with the way Wall Street was, right? I just wasn't happy anymore, for lack of a better word. So me and my wife moved down to Orlando, not really sure what I was going to do. My partners wound up buying me out of the firm, and I was trying to figure out what my next move was. Long story short, one of my mentors was actually in the small business lending arena, right? He trained me from when I was a broker. He actually owned a really successful boutique broker dealer up and down the East Coast. And he had left Wall Street too and got into this small business lending space. So I just kind of tagged along with him and followed him on the ride and learned a lot about the small business lending space. And I started, investing my own money through different financial vehicles to small businesses because we realized after 2008, a lot of these larger banks withdrew from the market, and small business owners couldn't be helped. It's really hard out there for small businesses to get money. So
Mhm.
long story short, I started lending money out there. Things were great. Things were pumping along. And then all of a sudden COVID happened, 2020, right? Couldn't put my money out anymore to work for me because the truth of the matter is I didn't know if these businesses were going to be around anymore. Nobody knew. The world was falling apart. I seen it happen in 2008, and it took years and years to recover. We didn't know what the next move was. So we decided at that point to help a lot of people with PPP, EIDL, not take any money for it, but just help educate them on it, right? And I had people calling me up for money for their business in the middle of the night, and they couldn't get any, and nobody was out there to help them figure out how to get their EIDLs or their PPP. Just like you guys on the accounting side of things, this was all new information for us. So you had to have relationships in banks to know how to help your clients to where to go. So we started doing that, and then I had a revelation, right? And it really was small business owners really need more than just a check to survive, right? We can give them
Mhm.
all the money in the world, but if they don't know how to use that money properly, it's going to blow up in their face. So that's when I had met Luigi prior, when we both worked on Wall Street years ago. Came to Luigi and said, "Hey, Lou, why don't we just start a small business consulting?" Right? So we put our heads together, and that's pretty much how Shield Advisory was born out of 2020.
Matt is the classic idea maker, and he kind of throws stuff on my plate and says, "Lou, figure it out, partner." So I try to integrate all his great ideas. And somewhere in the mix, you know, you kind of work out this great cookie dough. Sometimes it tastes good, sometimes it tastes not so good, but you figure it out. And the mantra is always, is this program or service in the best interest of small business, right? Because there's this reality out there, and it's a salient point, and all service providers to small businesses have to understand this. If you're a small business owner, there's only 24 hours in a day, and you are up to the gills in tasks and clients and emails and purchase orders and bookkeeping and accountancy. So that small business owner needs support. It may take different forms. For some reason, and this is the small business fallacy, the small business owner always thinks the Band-Aid is money. And very rarely is that true, because going into further debt never helps the problem, right? So what we try to do is reverse engineer this fallacy. Like, where have things gone wrong? If you have a problem with revenue, maybe you just need increased sales. Maybe it's a sales issue. Maybe it's a point of sales problem. Maybe it's a communications issue. Maybe it's a networking issue. Whatever it may be, ultimately, it's seldom money. And the irony is, when our first point of contact with clients is always in the pursuit of money. So we actually try to talk them out of not needing money, because sometimes that's not the solution. And that's basically Shield Advisory Group in a nutshell. Now, how do we put that together? Well, you folks know. Sometimes it's in the form of loans, lines of credit, tax credits, tax planning, acquisition strategies. Kyle, thank you for mentioning earlier, but Matt and I recently launched a book, Buying the American Dream, a strategic playbook for acquiring small business. And this was Matt's brainchild. We were just kind of taking the temperature of what was out there, and we kind of saw that the mood was demographically related. You had a lot of baby boomers retiring, and not a lot of them had succession plans. You know, maybe you had a child that had no interest in taking over dad's contracting business, or maybe you had a foreman that had no desire to take over the HVAC when the old man retired, right? So you had all these businesses in America that were going to fall off the wayside, and they were cash producing, had systems and processes in place. They had goodwill. They had some trade recognition. And when the guy retires, like the classic shingle, you know, when John Smith DDS retires, John Smith DDS as a business ceases to exist, right? So there is a valid point to acquiring small businesses in America as opposed to starting from scratch. You know, there's that old notion that everyone knows, 70% of businesses fail within the first couple of years, right? So by acquiring a business that's a couple of years old, you've circumvented that whole learning curve, right?
No,
So
that's amazing, and we've done that to grow our firm. You know, we've bought other practices and such, and it's interesting industry right now. I mean, we're seeing it in the tax and accounting side. There's a lot of folks, you say baby boomers, a lot of folks aging out. I just had lunch the other day with a gentleman. They're trying to find out how they can sell their firm, right? They want to sell it to some internal folks, but that's kind of not working out. Anyway, I've talked to and we've reached out to and spoke with several in the tax and bookkeeping space that are just walking away. Or we have new clients come into our office that, hey, my guy just called me and said he's not doing it anymore. Okay. I've talked to other folks that say we
sandbox that you guys play in. You guys have the most amazing sandbox. Accountancy, bookkeeping, reconciliations, to me in America, is that one thing that every business needs, but has not been able to be homogenized, for lack of a better term. So it's one of those industries which is prime for disruption. I just don't know how to disrupt it. So I'm this conscientious observer. I'm so curious as how the accounting space evolves. Matt is a little bit more of a go-getter. He wants to disrupt it. He wants to shake the shit out of it. But there's a couple of ways, right? You see guys like QuickBooks and Intuit, and they're taking this real, macro approach, and they're just attacking it by doing real inexpensive tax planning and strategy, and they're using technology, right? And then you've got franchises that are kind of pounding the pavement, that are taking the grassroots approach, right? I don't know which is which. And then all of a sudden in left field, you got the IRS coming in and says, you know what, forget about this, guys. We're going to automate tax planning because the IRS code is ridiculous. It's retarded. We recognize that, but we're going to hire tens of thousands of people, and then you could just do it yourself.
Yeah,
man, I got to tell you, something you don't want to do yourself. It's plumbing and taxes.
Well, we appreciate the kind words. You know that we need to be involved in the tax base, and everybody needs that. But it's bigger than that, like you said.
Right.
I mean, where Shield comes in, and I think it's so important with AI taking over stuff and blockchain and all of that. Most of your basic tax and accounting and bookkeeping needs are going to be done for you, and it's being done at the big level now. It's going to come down to the smaller businesses. So what does a small business need? And it goes back to what you said earlier. It's that value. It's not money. It's not necessarily the taxes. It's the structure. It's every little component and widget within that small business. And I think that's what you guys do so well, is come in. You can help facilitate people getting into business or getting that new piece of equipment through funding. But I think the real value is you holistically look at the business and says, how do you make it work? Right? Money's only a Band-Aid, right?
Well, Chad, let's call a spade, right? It always comes down to P&Ls, right? It always comes down to cash flow and what makes sense. When a business achieves a certain breadth, and I don't know what that valuation is, 20 million, 30 million, 40 million, you can assemble this brain trust, to use FDR's term. You can assemble a brain trust with a CFO, a general counsel, a controller. You can bring all that in-house. But each one of those roles is a couple $100,000 and is very, very top heavy. So until a small business achieves that goal, and they may never achieve that goal, where do they go for a shoulder to cry on? You can't go home to your wife because she's got other concerns, right? Sorry to make it sexist, but
yeah,
I'm just looking at the demographics. Okay. I'm lucky. I can talk to my partner, right? But you can't talk to a competitor. You can't talk to, that's why all these networking groups work wonders, right? These masterminds work wonders because you have a shoulder to cry on. So what we try to do is just input a little bit of perspective, given our individual expertise. It's no secret. Matt and I aren't that short in the tooth. We're pretty long in the tooth. We've been around for a while, and we've had multiple businesses. And if we can prevent one small business owner from making several mistakes that we've made over the years, hey, so be it.
So one thing that we see a lot.
Go ahead, man. Go ahead,
One thing that we see a lot over here is when somebody comes and they need some type of financing for their business, we have to ask for a full financial package: tax returns, profit and losses, balance sheets, accounts receivable, right? So essentially when we're looking at these, we can get a really good idea of where things are going wrong. And then we have a conversation. This is why we're a little bit different than everybody else in the lending space. They're just getting bank statements in. They're not taking the time to speak to the business owner and understand their business, right? And they're just trying to give them money, because let's face it, if you give them money, you get paid to give them money. We don't get paid to sit there and give them a strategy and advice to get them into the right products and programs that fit the need of their business. What we do a little bit differently than everybody else is we don't just give you money to give you money so we can make money. It doesn't work, right? What we do is we lay out a whole strategy for you to scale and get into better funding products if you're not in the top tier ones already, right? And I think this is I think everybody needs to start doing this and thinking a little bit differently if you're in a service-based business, right? Especially accountants. You need to start thinking of yourselves more of an advisor for the company and a consultant for the company, because a lot of accountants out there, and I know it's not you guys, but they're more reactive rather than proactive, right?
Yeah.
And if you're if your job is just to do these 1040s every single year and punch some data in the system, guess what? That business you want to sell right now is really not worth nothing. 5 years, we're going to have AI doing that for you.
Well,
Right.
and that's exactly why, there's members within groups that we're in, Matt, that, I've spoken with that are in the same business as I, and they want to kind of transition to more of that value add tax planning, more for entrepreneurs, high net worth folks, business owners, that sort of thing. And, you talk to them and say, did you sell your book of business, these 1040s and all this other stuff you're doing? No, the broker said it's not sellable. So I just kind of fired him. And I'm like, well, and that's where it's going. And fortunately, we have a side of our business that does handle a lot of those 1040s, simple business, but it's a stagnant business. It's not a growth business because technology has made it a lot easier for folks to do it themselves or people to open up their own little shop
Well,
in their house, so
if you
no,
look at the
it's
larger companies
more
in your,
than
if you look at the larger companies in your space, what they're actually doing is they're coming in and they're offering different products and services as well. Kind of like what we do, but on a much larger scale because they're seeing everything at once and knowing where the clients can benefit. So you have to have cross-selling opportunities and not just rely on tax prep anymore.
right.
Well, sure. No, and I see it very often, and I don't know how many people I talk to on a weekly basis that they've done away with their accountant, or in fact, I'm meeting with somebody tomorrow that I met at an event here last week. Just that their bookkeeper, their financial person, just isn't giving them what they need. They all want to sell that product, but like you say there in your book here, and it's got the if you have a business, you've got all these different sections of the business. Well, number one, you need a banker, 2, an attorney, an accountant, and an advisor, right? And really, it's come a long ways. I mean, a lot of times, and when I first got into business with Chad, he had a banker, and then I was used to having. To me, I had a banker. I mean, I had somebody that really worked with me day to day and, kind of thing. And we called the Chad's banker, he'd come into the office there and we called him the no guy because he'd tell us no all the time. It's just like, I mean, we're doing it, and we can show that we have the income and, I'm an entrepreneur, Chad's a CPA. We show that we have revenue, but they're like, how do you guys do it every year? Because we know how to run a business is how we, that's why we have that income that we have each year. But you just keep telling me no, because it's just, they don't see the strategy side of things. So it's like a breath of fresh air talking to you and because you can provide that next level, because you're not just going to offer people some money, but then just not have a plan for them. And sometimes I don't think that a banker necessarily knows how to do that. They know to read your balance sheet and your P&Ls, but can they give them that strategy that they need? And I see that's where, we and yourselves come in and can assist in doing that.
Well, so, Kyle, in that banker's defense, he's working for a lender that has strategically diagnosed an area of the market, and they attack that area of the market, right? So they only want to deal with this type of small business that has this type of revenue and has
right
this sort of trade, and it's like a horse with blinders on, right? So we've positioned ourselves in this middleman role because we don't want to be limited, because we want to have a breadth of services, right? Because the solution for a guy with an 800 credit score with 7-figure revenue is very different than a gentleman with a 600 credit score with 6-figure revenue, right? So you need to create that custom suit for each small business owner.
Yeah, no,
So,
that makes sense. Hey, go ahead, Matt.
Yeah, I was going to say, this is no different than what I did on Wall Street, right? We're just doing it for smaller businesses and nobody else is doing it out there. When a company wanted to sell shares, right? They come to us and say, hey, listen, I have this company, send me your financials. Review the financials. Okay, we think we have something here, but tell me your story, tell me your strategy. We sat down with you. Most of the time, so what do you guys want to do? I want to raise money. How do I do that? Okay, I'm going to bring you across the street to Jim. He's the attorney. We're going to get the PPM written up by him. Then I'm going to bring you over to Chad. Chad's going to run through all the financials, make sure they're audited and our numbers are safe. Then I'm going to walk you across the street to investment bank A, B, and C, get their brokers on board, and we're going to raise money that way. All we're really doing is quarterbacking and putting the dots together giving our clients access to the capital that they need and bringing our relationships to the table, which the money is one thing, but our relationships are really what's priceless at the end of the day.
Sure.
Yeah. No, that's awesome. Lou, you kind of alluded to it. You got businesses that, everybody's in a different box, right? In terms of credit worthiness or score or whatever the traditional lenders look at. So I know there's kind of I don't know if it's a stereotype or connotation out there that when I say I've got some outside lending sources to come in, they're thinking 20, 30, 40%, some shark type lending. I know that's not right because I know you guys, but how does someone, because that is a common issue. I was sitting in the sauna at the gym last night and a young man was in there and a couple of them, they were talking about, he's an electrician. He wants to start his own business, but he's going to employ himself and all this stuff. And I said, yeah, you guys are talking about the right stuff. I'm a tax guy. I can, speak to this a little bit, some of the structuring and that, but he's looking for financing to buy a business. So I don't think he's probably that traditional bank type. How do you guys navigate those? I mean, and what's the spread? I mean, do you get into more traditional stuff versus, hey, this is a little more risky?
Yeah, Chad, you're absolutely right. And it's, there are a lot of variables that go into that equation. You're right by saying the four of us are in a space that does have a lot of negative undertones. Unfortunately, there are a lot of nefarious lenders out there that give the industry a bad name. There's a lot of bad deals being had. Unfortunately, it's a space that is not highly regulated. And whenever you have a low barrier to entry, everyone kind of slithers underneath that barrier. Okay. That's changing, I think, for the benefit of the small business owner and for the benefit of the marketplace at large, but it may take some time. How do we deal with this? First, you have to start with integrity. You always have to do the right thing by the clients. Two, you have to understand everyone's risk aversion. Okay. What good is a 7% SBA loan if the small business owner has no desire to put up any collateral? Right?
By the way, they're 14% today.
Thank you.
The SBA's 14?
Yeah. So a Bolt program loan that we have is it's usually 2.75 above prime, right? So these lower end SBA programs that they came out with, so you don't have to wait, 6 months and sign your firstborn away. They're roughly 14% right now.
Holy.
So
and that's the aspirational product, right? So this is the
Right.
this is the atmosphere we're operating in. That's the aspirational product. So imagine the second tier and third tier type products out there. Like the appetite for small businesses right now is zilch. Okay, it will change. There's a certain cyclicality to it, right? But you get to know the business. You get to know their cash flow. You understand their revenue streams, and you also learn to lean upon different assets, right? Accounts receivable is an asset.
Sure.
Equipment and manufacturing capabilities is an asset, right? Goodwill sometimes, depends on how we look at this, can be an asset, right? So you can leverage those different revenue streams. So like I said earlier, it's a custom suit depending on the type of business that we're dealing with. So the way we look at a white collar service provider is very different than the way we look at a SaaS, or very different than the way we look at a manufacturing, right? It's almost a different species.
Mm-hmm.
So, like Luigi said, every deal is unique and has to have its own capital stack based upon its own merits. Now, the merits also have to be for the buyer too. What can the buyer bring to the table, right? What is the seller going to bring to the table when we look at this capital stack? Now, everybody was shaking their head when they heard 30 and 40% interest rates, right? What if I told you I had a deal that's doing $1 million in revenue right now? You needed $100,000 tomorrow to get the down payment, and the seller would hold the note for the next 5 years on the $900,000. The money's going to cost you 40%. Would you do it?
I'd have to put it in a spreadsheet, but yeah, probably. On face value, if you say do it now, I'd probably say no. But I'm guessing.
Yeah, Shannon, what happens is once you peel back that artichoke, the opportunity costs make you go with the deal simply because it's the opportunity that you don't want to miss out. So maybe that 100,000 has a little bit of a higher vig on it, but holistically, like you said earlier, when you look back 2 years later, now you have a multi-million-dollar business that, yes, maybe a portion of it was a little bit more expensive, but it was a little bit more expensive because you put yourself in a position to be more expensive, right? Like,
See, no, I take a different stance here. Expensive compared to what? You're using somebody else's money to purchase
correct.
a business, right? That it's doing $1 million a year in revenue, right? The only reason I would lend to you $100,000 on that business is because I'll do 1 times your monthly revenue, right? So I'm going to take my money back on that. I don't know, every week, or if I did it every day, right? We could figure out whatever the payment structure was. But you get control of that company at that point, and the owner's holding a note. So even if I'm out of that inside of 6 months, you just got a company for nothing that the cash flow from the company paid for the business.
Well, sure.
Yeah. Are you saying financing 900,000 at 40%, or there's that initial?
No, 100,000
Okay.
down
Is that-
payment,
you're
having
talking
the
about
owner
the-
hold the note. Yeah,
$1
You're talking the 100,000 money up front.
yeah. So
Oh
the
yeah,
cash flow from the business is going to pay back
okay,
that
I
note.
got you. That's a little different story. I was looking at
So
it.
we can't just throw rates out there without having a strategy behind it to see where it would make sense. Because just an example that I gave you, the cash flow from the business pays the note,
Sure.
pays the initial down payment back, right? And then the owner's holding a note. Who knows what the terms of that's going to be? But at the end of the day, the cash flow from the business is going to pay the owner back, and we could figure out whatever other assets are in there in that time. Maybe there's heavy machinery. We can go and we can get some notes off that as well, and we can leverage it out. It's just a leverage buyout. It's what these guys used to do in the late 70s, 80s, and early 90s. You know, it was Gordon Gekko style, basically. You know.
So I started reading. So I started reading the book, and it really has a lot to do. Like if you're a, if you're a W-2 employee, and maybe you want to go, you say, really, if you want to get ahead in life, you're number one, you're going to have to go out and you're going to have to probably work 2 jobs at one time, or you're going to have to put in 50 hours and be, get in some sort of a business where maybe you're a silent owner and, make that work somehow or another. But I've always kind of maintained, and I preach this to my family and my sons and such. But if you want to get ahead and you want to have that business, there's comes to be a point in time in your life where you're going to have to make that sacrifice. So you're probably going to have to work 2 jobs at once in order to, otherwise you're going to have that cash, where are you going to get that cash flow from type of thing. But just what could you kind of tell us some like introductory steps? Like if you're just kind of getting into business right now, what are those types of things that you look at that when you're entering into a market, kind of in a nutshell, what are some things that you look at and saying, hey, this is the kind of business that I want to go in, and what do I need to weigh in making that decision?
Hey,
Well, the
partner,
first question is,
go ahead, buddy. Go ahead.
no, why are you buying the business, right? Why? Are we buying it for extra income? Are we buying it because we love it? Are we buying it to sell it in 5 years, right? We need to know the strategy of why you're buying the business. Do you just want to leave your W-2 job and be self-employed, right? Because if you're just self-employed, you're not really a business owner. If you're just paying yourself and all the business's money is coming back to you. So yeah, we have to figure out why and why are we buying it.
And Kyle, just to piggyback on your notion earlier, the small business owner by definition has multiple jobs, right? He's probably, when he's starting out, he's probably the bookkeeper. He's probably doing sales. He's mopping the floor. He's doing inventory. He's doing all of the above. So he or she has multiple jobs. But a couple of things that Matt and I like to look for in businesses. One is obviously standard operating procedures, right? You can't copy and paste if the original is not immaculate, right? So once you have an immaculate first version, then you can copy and paste it. And 2, we love to see good operators. Like we can forgive bad bookkeeping. You can hire someone to fix that, right? We have Chad and Kyle, right? You can forgive maybe a sloppy SOP, but if you're hiring or buying an HVAC company and this guy is not a good plumber, or you're hiring an electrical contractor and the operator is not a good electrician, it's the operators, that key personnel guy, to us that is like the shining light in that business, right? Because at the end of the day, you can try to automate everything. What we can automate is that personal touch, that human interaction, especially in the trades.
Yeah.
Right. I've seen some pretty crappy, profitable, plumbing companies out there. But yeah, I see what you're saying. Is how do these guys do it? And they got a fleet, and they're terrible operators. And I don't know if you guys ever seen. I mean, I've even worked in some large companies where their SOPs are horrible, but they're in such a good, glamorous, wonderful market that they can still suck and still make money. It really surprises me to see that's out there.
It's like that adage: rising tides raise all boats, right? If you're a pool installer or servicer in the Phoenix area right now, any Tom, Dick, and Harry can make money, right? If you're an HVAC guy in Atlanta that's experiencing a huge construction boom, everyone's making money. But go into an industry or a geographic area that is mature, and then you'll separate the cream from the crop.
Sure.
Right.
So let's stick with HVAC for a second, right? So what I would look at, I'll just tell you, is I want a company that's been around at least 10 years, that's weathered a couple storms, right? That has more than 10 employees, and it's not just the owner running the day-to-day show, right? I want to go in there and see what their procedures are, who's really running the show. I really want a professionally managed company, which is more than just an owner doing most of the work. I want a team underneath it, because if that owner can't go away for a month or 2 months, really, and the business is going to fall apart, it's not really a business I want to buy, because I don't want to be in the day-to-day operations. So that's the reason why I asked you, what was the why? Are we buying a job? Do we want to work there? Do we just want to oversee the business? Like when I told you I bought the firm on Wall Street, I bought that because that saved me 2 years of regulation, right? So I can acquire the company and not have to go through all the licensing, right? So that was my why for that. So, the first thing that anybody has to ask themselves is, why are we buying this? Are we just buying one and done? Are we going to do bolt-on strategies? Are we going to try to sell this off and build a bigger company? So me and Luigi are looking at companies right now for ourselves to buy that fit our model, right? We need to buy companies. I'm doing what's called an acqui-hire. You guys familiar with that?
I'm not.
Okay. So essentially it's when you buy a company, but you're not buying the company for the revenue. You're buying it for the team. So I'm acquiring the team of the company. So these are companies that I'm looking at. So I have bigger teams inside of our core business right now, people that are used to it. The owner wants out. We can give him some money, but he has a really solid team that's under contracts that we could take with us. So that's a great strategy. Other companies that we look to buy is somebody that still has our same client base, right? So we can go and offer our products and services to their client base. There's a lot of different reasons why you buy a company.
Mm-hmm.
Yeah. No, that's excellent. And there's so much opportunity we've alluded to with, a lot of the small business owners now aging out. What are the top 3 things if whether you're an existing business and you're looking to expand? One of the easiest ways to expand is to acquire another business. But what are the top 3? And I think you've alluded to one already: good management, right? Unless you want to just own the work and add more hours to your day, right? What are the top 3 things you would advise them when looking at other opportunities to grow their business through acquisition?
Well, the first one's not really going to be that popular, but stay off these websites, Biz Buy Sell. Stay away from brokers. Look, truth of the matter is, these brokers out there, they get a listing, it sits there. The average age of a business broker is probably somewhere in their 60s. So they're not going out there. They're not marketing the businesses properly, right? So what I would do is I'd find a way, or find a database and start reaching out to business owners to see if they want to sell, right? It'll save the business owner the commission. Plus, you don't have to deal with the nonsense of these brokers. A lot of these brokers don't even know what they're talking about at the end of the day. They're listing businesses that say pre-approved for SBA financing. There's no such thing as pre-approved for a business to be SBA financing. They're making a decision based upon their financials, and they're not a lending institution, right? So stay away from brokers is number 1. Number 2 is, don't get scared of the price. Everybody's going to first say that they want the highest amount of money possible. Deal with the price. Price is not the biggest factor. The terms are. I'd rather have better terms. You can have your price, but I want my terms, right? If you want $1 million for your business, I only want to give you 500,000, but you'll take that $1 million over 20 years. And I like the business, I'll do it all day long, right? So don't get too caught up on price.
Yeah.
And the third thing to really do is look at multiple companies. Don't just go out and somebody says yes and you're excited and send an LOI out and make a purchase. Look at multiple companies. Find 10 different companies in that industry, get their financials and compare them to each other.
How do you find these companies, Matt? I mean, if you're not looking at brokers I mean, how are you guys navigating the terrain and seeing, well, let's just say we're looking for bookkeeping companies, you know, and I'm just throwing that out there, an example. We took a list off of a database. We sent letters. We called. You know, have we been aggressive? No. Is there other ways, or is it just that dogged, you know, sit down, that grit and grind through it and continue to follow up and create a plan around?
So we actually have, we got a little bit of an edge here because people come to us for money. Right. So if I see a company that I like, I'll let you guys know if it's in the bookkeeping space. Right. But we can offer them money on the equity side. Right. You're coming to borrow money from me, so I have an edge. Right. So I probably see 25 to 30 different deals a day. Right. I don't do them all, but they're all different industries and some don't make sense for me. On the flip side, you can really just go out on Facebook. Right. And put it out there to your network chat. I know you're great on Facebook. You guys are doing a great job with this podcast. Let people know that what you're looking to do. I'm looking to acquire bookkeeping companies. Is it going to be nationally or is it going to be local for you guys? Does it matter?
It doesn't. It could be either way.
Yeah, it could be nationally. It just depends on their framework and if it works. You know, we don't want a job, right? We don't want to buy a job, but.
I would say I'm looking to buy 5 different bookkeeping companies within the next 12 months. Please let me know if you have anybody that's interested in selling your business. Go into Facebook groups, go onto LinkedIn. But honestly, yeah, it's the grind. It's the letter writing. It's the way you position yourself also. So when you guys are writing these letters, let me ask you, what is the copy inside the letter? Because that means a lot too. Hey, I want to buy your company. It's not going to work, right?
Yeah.
So we can work on that with you guys, but something along the lines is, hey, listen, I'm an investor. Currently looking to invest in a couple companies in X area, right? Especially in the bookkeeping space. Your name was given to me by X. Would you be interested in having a cup of coffee or having a conversation? Listen, if you want to, look, as a business owner, it's awesome when somebody comes to you and says, I want to invest in your business, right? Just open
it gives you some sort of an ego lift, right?
Yeah, you makes you feel good, right? Oh shit,
yeah.
People know me.
I appreciate that. And we have done that, probably not to the extent that we need to hammer down on it. But in general, for all small businesses that are looking to grow, the opportunity is ripe out there. There are a lot of businesses in all service-based areas that are their owners are looking for an exit because, like you alluded to earlier, there was no planning when it started or over the last 2 years, and now they're kind of, I want out. But anyway, we got a couple minutes left. Kyle, you had last questions, and then we'll wrap this thing up.
No, there was a lot of great content there. I love it. And one thing that you'd said there, Matt, is look for the terms. And I think also that works on the owner's side because the owner can get their buy price as long as you can provide that term. It makes it that much more of a lucrative deal. I've done a couple of those before, and that's always fulfilling. But yeah, kind of alluding back to when you're going and looking at purchasing somebody, let's say in your same industry, I guess what we're kind of maybe looking at is that not so much buying the business so much for the business side, but the fabric of the employees that come with that. What makes up a business is that strong tenure that they have within those organizations, and then you can help grow your own business by acquiring businesses as well, not just buying another separate business. So there's a lot of different reasons out there for that. Gosh, I think you guys, I love that you had so much to provide here. I think the conversation is just starting. We probably got through the first 8 chapters of the book. I want to see what's in the back 32 or so that's in there. So I think there's a lot more meat to come. And continued conversations if you guys would be so kind to come along and maybe do this again down the road and maybe we can meet on quarterly or something like that, or vice versa, whatever. So
That'd be an honor.
Yeah.
Love to.
Great, guys. Well, I appreciate it. Hey, great episode of the KB article. Appreciate Matt and Luigi coming in and sharing their wealth of knowledge. Hope you got something from it. I know our goal here is to optimize the growth and financial well-being of our listeners. And I think if you listen, take notes on this one, you'll definitely find that there's a lot of value here. So appreciate it, guys. Till next time.
Thank you. Thanks.
we'll see you later. Bye.